Investors and traders, welcome to the channel. Market Chat Pattern. Today, 7th of August 2024. Hope everyone is having a great day. We will be taking a look at the key financial stocks and ETFs in this video, but we will start by taking a look at the major stock indices such as the Nasdaq 100 and S&P 500, because there has been quite a lot of volatility in the marketplace over the course of past few trading days. As always, this video is for educational purposes only and it's not a financial advice. So we'll start by taking a look at the Nasdaq 100 futures chart. This is the daily chart, and then we will move over to S&P 500, and then we'll start by taking a look at the financial stocks. Okay, so here what we were watching for was a possible retracement to around 18,760, because that's the 38.2% retracement of the entire swing high to the low of 5th of August. But the market didn't actually quite get there. What we did see though is that the market making an attempt and rallied 38.2% of this blue segment high to low, but was not able to close above that. So it was a pretty impressive rally, but what we have seen is a disappointing price action. So the chances are that this is actually a direct market feedback that the market is pretty weak, and before it is able to really find strength, and the 5th of August low, if it is a low which is likely to be held, we might actually see pretty increased ranges, but the market might just begin to go sideways in a trading range for perhaps a few more trading days before it's able to find further strength. So it's quite likely that what we have seen on the 5th of August is actually a low which could actually be held for quite some time. And what would be really encouraging to see is that if the market is actually able to get to the 38.2% retracement around 18,750 and actually get above that, that will actually begin to show there is strength coming in the market. However, the scenario is that the market is likely to remain range bound, although these ranges are pretty large intraday. So it might just be the case that this is probably the first leg of a move lower and we could see a retracement higher, or it could also be a pretty good low in itself. So we'll take one thing at a time. But here, disappointing price action today. It was encouraging to see the market being up till the afternoon, and then during the second half of the day the market actually began to sell off. So that is just direct market feedback. There is still quite a lot of weakness in this market. If we move over to S&P 500 daily chart, this is the cash index. So the 5th of August low is still intact, and this is quite an interesting ABCD price pattern, where the CD leg is expanded by 1.618 of the AB leg, and it comes right at this support level as well of 78.6% retracement of the April lows. So quite a few things going on for it, and here again what we need to make a note of is that the market rallied right to the 38.2% retracement, and in this case it went right to the here we go, this is 38.2% retracement of the total move. So highs of 15th of July, and then a low which came in on the 5th of August, and the market, when it reached that, it just went right to the tick. It just sold off, so the sellers were waiting for it over there. So this just shows that the market is actually pretty weak, but getting below the low of August 5th is not going to be a good sign. In fact, it'll be a direct market feedback that there is a fair amount of weakness in the market, and market actually might be preferring lower prices. And of course, we have the 200-day moving average, which is also creeping up, getting pretty close to the level that we have seen on the 5th of August. So really watching these really key levels this week, and the chances are, or the preferred scenario is that actually market goes sideways. These are pretty large trading ranges or during intraday intervals. But the important thing to note is that the 5th of August low is still, which is our point D. Maybe it gets retested, but still intact. Getting below this will change a lot of things for us. Okay, now we'll start by taking a look at the KRE, which is the S&P 500 Regional Banking Index. So I'm gonna move over to the weekly chart, because on the weekly chart we were tracking quite a few things. So it was really encouraging to see that when it broke out of this range, this trading range, and these 3 weeks were really powerful moves to the upside. But now it's just moved back into the range. And we were watching for a possible completion of this ABCD. This is the extended CD leg of the AB, which could see the stock move to about 62 level, but it came pretty close, 59 and a half, but missed this part so far. So as long as point C is still intact above at 46, potentially we could still be in this CD leg, but we can see that the past week has been pretty brutal for the regional banking index ETF. Here is the daily chart. On the daily chart, we can see that one of the technical reasons that why we have seen such a strong pullback is because the market just went to the 1.618 expansion of this entire range, and here it's just pulled back. The chances are it might actually close this gap right between the 89 and 30 200 period moving average from a retracement perspective. Let's see how much has it retraced. So yeah, it could retrace all its way right to the 78.6% retracement, and I believe it's done 61.8%, and then I went for a bit of a bounce. Sideways to downward is the kind of action which could be expected, where it could fill this gap on the daily chart shorter term. Now let's take a look at the XLF. Here we go. Weekly chart of XLF, and on the XLF, it's really interesting because we were expecting that XLF could actually reach about 45 at least, and then there was possibility of this bigger ABCD, but not entirely sure of this one. But 45 was because it's at 1.272 of the expansion of this entire bear market. It came pretty close to it, around 44, missed it by about a buck, and just moved lower. Pretty rough week for XLF the past week, but some of the broader stocks such as Nasdaq 100, they have been actually much weaker than the XLF, the financials. So there we go. So financial seems to be doing a bit better. This is on the daily chart, and here we can clearly see a double top formation right at the 1.618 expansion of this move of high in March to the April lows. So this could be probably a technical reason. And what is interesting to see is this market is actually moving back towards the bottom of this range. Now let's take a look at the Goldman Sachs. Here we go. I'm gonna move over to the weekly chart for Goldman Sachs. This is where we were tracking the stock. So here we go. Goldman Sachs went right exactly to the tick, 518, and that was our target, because that was the 1.618 expansion of this entire range of November 2021 highs to the lows of June of 2022. Also interesting to note is just nearby it had actually completed 1.618 expansion of this ABCD swing. This is the AB swing, so 1.618 was much higher. Now what is happening with the stock is it has come back testing the bottom of this range, but it's possible it could in fact pull back a little bit further to around 420, which is gonna be the structural support around this region. And let's see where the 38.2% retracement comes in. So there we go. So 432 to 420 is the kind of shorter term target. It can pull back a little bit further. On the daily chart, I'm just trying to see if we have any ABCD patterns around here. We do not. So 420 is the kind of the range it can further pull back into. Let's take a look at JP Morgan. Here we go. So this is the chart of JP Morgan, weekly chart. Really impressive to see a long-term trend line in place here. So the stock has done extremely well. This is the pattern that we were discussing. You see this big blue one. It's a 3 drive to a top pattern. We had the ABCD come in as well. So confluence of two things. In fact, three, because of the 1.618 expansion of this BC swing. So it's a pretty important. I think the stock has put in an important top, in my opinion, because we have a confluence of three things coming together. Smaller ABCD. There is really nice symmetry between these highs of 3 drives to a top pattern, 1.618 expansion. So we were, when this was happening, in fact, before it happened, this is what we were forecasting based on this pattern. Last time we had a slightly different pattern around here. Look, it just went down quite a bit. So the chances are we could see further distribution signs to appear in this stock. JP Morgan, a fantastic organization, but all stocks, can go through distribution and accumulation phases. So it can pull back a little bit further right into 185, which is going to be the 38.2% retracement, and further below we have 173, which is going to be this B point here. So structural, pretty important structural support around here. And now one of the things is that a subscriber had asked about JP Morgan. So I did long-term analysis on JP Morgan stock, and what is possible is actually that this is the monthly chart. You see such a nice, beautiful trend which is intact. And I call it the diamond rally because it's really been Jamie Dimon who took over, who actually became the chairman of the bank back in 2005 or 6, and in 2007 he also became the CEO, and he was able to navigate the bank through the great financial crisis. And for sure the organization has been rewarded by the shareholders. And look at his performance about 14-15 years later. But what the stock has also done is complete this big ABCD pattern right here. And there's also a upper channel. You can draw more like a wedge. There is some symmetry in there, not a perfect symmetry, not as much symmetry that I would like to have to call it a 3 drives to top pattern, but it's like a variation of it. So my opinion is that the stock is likely to enter a trading range of between 200 and 225. It's a fairly large trading range, but we may see sign of distribution come in. We have already seen, although the month is not over yet, but it'll be if it closes lower, it's gonna be in the past 3 months, the first month, which will be closing negative. We have had a negative month close in April as well, right at the smaller ABCD, but this one is a much bigger ABCD. And on the weekly chart, we had some other ratios coming together as well. So in my opinion, the trading range to downward would be the longer term kind of price action that I could expect in this. Of course, if the stock just keeps on ripping higher, that analysis will be not applicable. But this is what I see as of now. Okay, now let's take a look at Citigroup. Oh wow! So the Citigroup, this is what we were talking about. The price action was not that great for a really long time. In fact, it has not made an all-time high. This is like before the scare of pandemic here, and in fact you could see it was a double top formation here. Pretty weak stock, and now we found further weakness coming into it. From this wedge formation here, broke below the wedge formation right from the 61.8% retracement. Pretty weak stock. Could see it move below to around $50. Yeah, quite easily, in fact. Now let's take a look at the Bank of America, one of our favorite banking stocks to take a look at. So here we go, Bank of America. So the Bank of America stock is actually also taking a bit of a beating. It comes right from this pattern formation. In fact, it met our target, exceeded it in fact, but we also had this timing coming in, and this is a 90 degrees triangle. I'm not gonna go into the details of the sacred geometry, but the way a rectangle works is that it's like two triangles put together, and this one happens to be a 90 degrees. So you can search some of the Pythagorean stuff on triangles. So that just joining this line like this was telling us that there was important timing coming in, and we have seen the stock move lower quite a bit. So we were looking for about $35 per share level as the point it could pull back to, and the stock thus far the week is not over, came back to about $35.14. From here onwards, I think we'll just be watching for further price action. I think we'll just enter sideways trading range behavior, but again, the week is not complete. So when I do the weekend review, hopefully I'll have the time to actually also cover this segment for the financial stocks. Let's take a look at Morgan Stanley. Here we go. Stock also had a sell-off taking place in here. It reached our this gap that we had identified. It went right into it. It completed this black ABCD pretty much to the tick. So it has a number of things going on for it, and a pullback is expected. Now, this could also be a double top formation, and if you look at this entire thing, it's a massive trading range. So the possibility remains that this could actually pull back by about 50%. That would be the 50% will be, in the middle of this range. Here we go. So around $89, it came pretty close, 91. So it can come a little bit further down to about 89. Below that we have 85, which is 61.8% retracement, and then we also have this trend line which will provide some support around here. But it does have a potential to come all the way down and test the bottom of the range, and this little gap from December of 2020 still remains open, and that could possibly be a target that market might come down and close that gap. So there we go. Okay, so I'm gonna delete this one. Okay, and yeah, okay, fine. Here we go. Let's keep it here. All right, so now let's take a look at Wells Fargo. There we go. So it's a double top around here. It went into this gap formation right here to the middle of this gap. Not able to sustain the upward momentum, so I don't think I'm gonna remove this blue. We were looking for this purple ABCD. So in my opinion, it's actually a head and shoulder pattern. So this is our left shoulder, this is our head and right shoulder. Let me actually put it like this. Head, oops, let me make it a slightly, yeah, that should do it. And then this is our left shoulder, and this one is going to be our right shoulder. And then we also had a little bit of smaller head and shoulder pattern around here as well, which we had discussed before. So I'm not going to label it because we have the big one in place. So here, I think really critical for the stock will be this. Let me draw this trend line, make it a little bit thicker, even more, and maybe change it to dashed. So if it breaks below this trend line, then I think it can go back to about $40, $38, bottom of this range. So this is what we are looking at in the key financial stocks. So we did a recap of the market's price action in the S&P 500 cash index and also the Nasdaq 100 futures. And if you like our technical analysis, please give the video a thumbs up. It really encourages me to keep on making more videos for you guys. And if you found this video and the way we do the technical analysis using pattern recognition and Fibonacci retracements and projections, then please do subscribe to this channel. And if you do, then click on the bell icon button. That way you will know when the new videos are posted, so that way you will not miss anything. So thank you very much for watching the video. Good luck and good training, and speak to you guys soon.